Alrighty, folks, we have a shocking California real estate update about activity in February. It is also Fed Day, so we will get into the dot plot. I have a sneaky suspicion that Matt and I will disagree on what is coming out. We're recording this at 10 a.m. It comes out at 11 a.m. So certainly by the time you see it, we will know who is right, whether he is or I am. But Matt, let's talk about the shocking California update for February. Again, high prices, high rates. We got scary, job layoffs, all this stuff going on. So are we finally seeing California real estate crack and transactions and prices are collapsing?
Well, the opposite, right? Like I think prices continue to inch up and transactions continue to happen. If you take stats that are tracked from all the local MLSs across California, you get to see the number of transactions that are being done. And the number for February that came out in March, 283,540. This is a month-on-month increase of 11%, which no surprise, January to February, that's more of a seasonality thing. But if you look at February of 25 versus February of 24, we're also up 2.6%. And that 283,000 number is the largest number we've seen since October of 2022. So like,
wait. So, okay. So I get the first couple of numbers. We're up month on month. Got it. January to February, usual. We're up a little bit February to February. But did you just say the February number that posted was the highest number of transactions since 22?
That is what I read. I think it was Calculated Risk blog. I can double check it, Mike, but I'm relatively sure it is. And I remember feeling all this energy in January, right? And February closings are going to be
January pending.
January and some of the December stuff that actually closes in February. And so, it doesn't really surprise me. I'm relatively certain this number is correct. And so for everybody who's like, it's impossible to buy a home in California, rates are high, prices haven't come down, you've got to make $250,000 to be able to qualify. Transactions are still happening. And this is proof, right? This is one of those numbers don't lie. And for everybody who's on this, the sky is falling, they take a market in Austin, Texas, or a market in, a part of Florida that it's seeing a 10%, price drop over the last 12 months. Like transactions are still happening. And
we got to peel that back a little bit, because again, the other thing that I think is happening in California real estate, because I just talked to Adrian Hernandez, he covers Southern California literally a half hour ago. And he said that active inventory is up 64%. Days on market are up 43%. Now, most people hear that and they're like, good, prices have to be coming down. And the unfortunate reality is, given the inventory mix of what's selling, it's not. The median home price is still up. So it's wild. It breaks people's brains. But yes, inventory is up, and I would say up significantly. Days on market are up, and again, I'd say significantly. But when you calculate the median home price sold, it too is up. Now, that could all change in a month. But I only think it changes for one of two reasons. One, interest rates collapse, because I think the crazy thing, Matt, that's going on is the median home price is being distorted. And it's being distorted because we're not seeing a normal market. A normal market has the most activity at the low end, the entry level, the move-up buyer. And that market is still broken. So when you remove a third of the market, of course the median goes up. It's just how math works.
Yeah. I mean, it's interesting too. Yeah. Cause I've got I just had a realtor partner of mine set a record for, a $3.6 million home. And so, when that stuff trades, it obviously pulls up the median, and you're absolutely right with, we're still broken. There was a glimmer of hope in housing starts. I think that number was also up. So we had 1.51 when you annualized it. Housing starts in February for the state of California. But it's definitely interesting times. I'm seeing all kinds of what I would, describe as weird stuff happening where
the market is evolving. And you got to remember, dude, we're on the cusp of the spring selling season. We're like right there. And it's going to be very interesting because I think, again, the numbers we just shared were February and February actuals, which mean December, January pendings. Got it. But I'm hearing for a lot of people that the activity right now, like mid-March, not great.
Yeah. And the funny part is I felt like we were hot, and then it kind of spurred this idea with me and I think a lot of consumers that like this spring buying season is going to be hyper competitive. It's going to be hot. And, rates had come down over a period by 0.5%. And so that's 7.25 to 6.75. That's got to inject some demand. But then you stop and you look and you're like, wow, 23 days on market, 31 days on market. This stuff isn't moving. The wildest part about all of it, Mike, is I think that I'm also seeing another trend where, sellers are relatively stubborn. There's some sellers out there that are somewhere in between. They don't need to sell. They're not one that's going to just like, oh, hey, let's just rent it. But they're like, you know what? Like, I'm going to get somewhere close to this price. I don't mind if it takes 45 days to sell. I don't mind if it takes.
Or it's like, again, I think we still have a fair amount of wish pricing. It's like, honey, we're good here. We don't have to move. So if we get this number, great. If we don't, who cares? We'll live here another year. There's some of that stuff.
Yeah, I mean, a good example of that too is property listed at $1,075,000. I don't think it was on the market for a long time, but realtor I'm working with, through talking to clients, really, really high quality realtor, knows the area well, and says, you know what, it's a little bit high. I think that this house should trade somewhere between $1 million and $1,050,000.
Mm-hmm.
So they came in at $1 million. You know what the seller countered? Started at $1,075,000. They offered $1 million.
I'm gonna guess $1,050,000.
They just countered full price, $1,075,000. and I think we've got another counter out at $1,040,000. And so we'll see, because that's the thing, is that sellers, I think, understand, hey, this is a nice house. This is a nice neighborhood. There's not many like me out there.
That's the key. That is the key. If you're in a nice neighborhood, and let's call it 250 homes, and you're one of two listings, you can play this game. But if unemployment breaks, and let's just say, because you're in Sacramento, government layoffs happen at the state level. Again, I'm not saying it's coming. I'm just saying, what if? And we go from 2 listings to 9 or 13 listings, then you can't play that game. That's
right.
The key.
Yeah. And that's where too, I think there's a little bit of, let's be realistic on both sides, both as a buyer and as a seller. As a buyer, if you're hoping for deep discounts, the only way you get that is a flood of listings. And I'm here to tell you that, like, you can look at short sales, quote unquote, tripling.
They did. They went from 2 to 6.
Yeah, they went from 2 to 6. So there's your tripling. There's no injection of supply that's going to happen from a big default crisis. The only way you're going to get supply, you also know you're not going to get it from building. Like, that stuff doesn't happen quick, and they haven't been on pace to even meet current demand, let alone.
Yeah, can you imagine being a builder right now? There's no chance you want to build, right? You don't know what's going on with the consumer. You don't know what's going on with rates. You don't know what's going on with tariffs. The last thing a builder is going to want to do right now is break ground on a big community.
Right.
They're staring at tariffs, on April 2nd or whenever they're coming. They're like, I don't know if that's going to happen. I'm not breaking ground on shit. Forget it.
Exactly. Yeah. And so yeah, I mean, it just continues to be a really weird market. And I use the word weird because I can't think of a better one. And so, transactions are still happening, hovering right around that, historically low 4 million annualized transactions. And it's the people that have enough incentive to overcome some of the barriers. You know,
it's gonna be
affordability is not where I want it to be. I'd prefer not to go from 3% to 6.75 and so the ones that are like bursting at the seams, I need a bigger house. Going
the
through
the must sell or the must buy.
Right.
That's why we're at 4 million, because there's always people that have to sell, have to buy.
Right.
And that's where we are. Well, let's get to talking to the Fed. The Fed's announcement is now 44 minutes away. So this is being recorded at 10:16 a.m. Pacific time on Wednesday, the 19th. I think I think we both could agree the Fed's not raising or cutting today. Can we just get that out of the way?
We're in agreement there.
Okay. So I think the biggest question is, what will the Fed's dot plot say about number of cuts? Currently, the Fed has said in their last release 2. The market is calling for what I'll call 2.5. They have a 50-50 chance on a third. So I'm curious, does a mortgage broker think that we're going to get more than 2 cuts? They're going to get 3 cuts from the Fed this year?
I think that from what I've seen, I think the trend, that probably at one time went sub 2. We're probably in the 1.5 to 2 cuts range.
Sure.
In the last 30 to 60 days. I think it's trending towards 3. And I think that there's enough talk around a recession and things that would justify more rate cuts to see some of that, like Q1 of 26 to be the third cut from today, being pulled into 2025. And so that's what I, wouldn't be shocked to see. Is that, there's at least a few of the Fed members that are going to place their dot that have 3 cuts on their bingo card for 2025.
Yeah. So I'm going to completely disagree with you, but also admit completely logical. It certainly could go that direction. And I do think it's going to boil down to, what are they more concerned about? Is the Fed today, right? Theoretically yesterday when they did this, were they more concerned about the economy or inflation? And what you're saying by saying 3 cuts is they're more concerned about the economy. I'm going to say they're going to go to 1. In fact, I think there's going to be, because last time there was one person that had 0. My guess is there's at least 2 people that have 0 cuts in 25. And I'm going to guess the average is 1 cut. So I'm going to go the completely other direction. They're going to take that second cut and punt it until 26. And they're going to take the first cut, which I think was in the summer, June, I think, and they're going to punt that till September. There's inflation expectations, tariffs coming April 2nd, be damned. I mean, if you look at some of the, the prices paid indexes, it's not good news on inflation. So my guess is the Fed sees the economy potentially weakening, but they're going to stay with the mandate of, we got to get inflation to 2%. And you can't do that by cutting a third time, in my opinion.
Right.
So,
I think too, it's like one of those things, differing guesses on what's going to come, both logical, both could happen. And I think what's interesting for people to look at, and what I look at from a mortgage broker's perspective, knowing that like it's not directly tied, but loosely tied to the direction of rates, is that in a short span of 6 months, I think we went from 5 to 6 rate cuts in 2025 being a projection not that far ago to you look out now, Mike, and the Fed will have 25, 26, 27, and then long term, like 5 or 6 rate cuts is now like a 5-year plan versus like all of 2025. And so if that happens, then like you've talked about before, and I think people should keep in mind, the real estate market and mortgage interest rates both. This isn't stuff that like changes quickly. And the current real estate dynamics and how the market is kind of functioning might be something that we just sludge through for 3 to 5 years. It might just be.
I've been telling people that for 2 years now. The next 5 to 7 years are going to just be like, just
And
yuck.
I think that there's, when you look at stuff that has, home appreciation impact, whether it pushes it up or it pushes it down, overall, like Zillow just updated their 25 forecast down from 1.6% to 0.8. I've said it before. I think like the road to a healthy real estate market is probably going through like years and years of just flat.
Yeah,
Where some markets, Florida and Texas, down 10%. Other markets where there's little inventory and there's demand, they're up 6 to 8%. Overall, the real estate market is flat. And so as a buyer,
Agreed.
expect that, right? Expect that like you're going to have stuff go up a little bit in the spring, go down a little bit in the fall, up a little bit in the spring. But overall, like you can look, I look at my local market and I'm like, a house that sold for $525 in 2022 could sell this summer for the same friggin' price, like 3 years of flat. And, for the super bulls of real estate, like real estate always goes up, buy a house. And, if you're there for 3+ years, you're going to see appreciation. No, you don't always. It's flat, right? And then, waiting for a date on the other side and a crash, bro, that's like, you'll get a 30% discount and rates will be at 5%, 3 years from now. That also is likely not going to happen either. So you're just going to have to, find a time when your personal situation aligns with, what? I qualify to buy, I can afford to buy. I'm going to be in this area for 10+ years, more than likely. I'm going to buy. It's not perfect. It's not easy. It's not super affordable, but given a 10+ year time horizon, there's very few people that I talk to that regret it. People that bought at an 8% interest rate and they felt like it was priced higher than they like in the end of 23 are still thanking me because now that same low priced house, they've got a friend who put in an offer and they're up against 12 offers and they didn't get it, and so it's always hard. And so, pick the time that you want to go in and do the hard thing, but don't expect anything easy in the foreseeable future. That's the unfortunate truth I'm seeing.
Yeah, I want to go back to, I think we did a video early in the year. Wasn't it Barry Habib calling 5.8% mortgages by the summer? Do I remember that right? Or am I just completely?
Yeah. He had some, correlation with the 10-year. And I honestly don't even remember what the big drivers were, but yeah, the 10-year was coming down and rates were coming down.
It was the rates and the spread. He thought the spread would come in as well. Is he still thinking 5.8's likely by the summer?
I don't know. I'd have to check back in. I think we actually have something on the books in the next couple of weeks with Barry for an hour. So I'll report back to the ORAP community. I think the problem with that spread from the 10-year to the 30-year is we're not any more certain. And certainty.
No, I would argue we're less certain.
Right. Certainty creates less volatility. We need absolute certainty to pull that, spread down to 1.8%. And, like you mentioned earlier, with tariffs, uncertainty about the economy and all the stuff we have going on, we're as uncertain as ever. So don't expect, things to be less volatile.
Yeah, there you go. Well, folks, let us know in the comments. Was Matt right? Did the Fed say we're getting 3 cuts, or was I right? We're only going to get 1. Matt, where can people find you?
Go to greatmortgagebroker.com. If you're looking to buy, I have people all the time. I'm a little bit early because I'm 3 or 6 months out. You're never too early. You're never too early to educate yourself, get yourself pre-approved, run a soft pull. We don't have to do a hard credit pull. But I know through doing this thousands of times, people feel a lot better about purchase. And sometimes, honestly, it's a pause or it's a non-purchase. When you talk to somebody who you like and trust, you go through the exercise of a pre-approval, you know your numbers, and you've got certainty. Where people run into issues and they have stress and they have uncertainty is see house, like house, go try to put together a pre-approval on a Sunday evening and an offer. Don't do that to yourself. Go to greatmortgagebroker.com. Connect with us and the team. We'll get you pre-approved and you'll be ready in case opportunity presents itself. If it doesn't, no harm, no foul, no cost to you, but get yourself ready. Greatmortgagebroker.com.
There you go. Thank you, buddy. Have a good week.